Why has the private equity industry been so silent up till now?
Well, let's talk about their firepower. It's $1.2 trillion. They also own an inordinate number of assets. Their average hold right now is around 5 years, which is pretty long. And they need to put money to work. And so, yes, it's been pretty quiet. Quarter over quarter, sponsor volumes are about flat in the first quarter, about 187 billion, or as I mentioned, the market's up 34%. So there's probably a lot of reasons to expect them to become more active. We've seen a tick up in take privates, which is terrific. And in the first quarter, there's been something like 17 deals over $10 billion. So it's starting to pick up. And I am cautiously optimistic there will be more activity.
What about sales? Because you think about the pressure that is very clearly under the surface, this pressure to give money back to investors.
Yes.
How are you hearing that pressure play out in your conversations with private equity firms?
Well, the good news is they have the ability to return capital through a couple of mechanisms. Yes, they can sell companies, but they can also do dividend recaps. And so if you take a look at one of the themes of the first quarter of 2024 is a pretty big pickup in recaps. So there is a way to get money back, and I think sponsors are being very thoughtful about that.
But is that enough almost? You're still holding the asset at the end of the day.
Yes. So my colleague Tim Ingrassi will talk about this, but I do believe buyers and sellers' expectations are starting to come into line. And so again, we're hopeful that we're going to see a tick up in sponsor volume, but as of now, they've been, relatively muted. People have cash, and there's just not a lot of new deal supply. 70% of the volume coming through the high yield market year to date has been just refinancings, right? So that means there's a lot of capital chasing a few transactions, which for the issuer is terrific. That means pricing's coming in and terms are likely getting more aggressive. But obviously, as the provider of that capital or the underwriter of that capital, you've got to keep an eye on that.